Ladies and gentlemen, good day and welcome to Q2 FY2024 earnings conference call for Rushil Decor Limited, hosted by Asian Markets Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectation of the company as on the date of this call. The statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectation, projection, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that the conference is being recorded. I now hand the conference over to Mr. Karan Bhatelia from Asian Markets Securities Limited. Thank you, and over to you, sir.
Thanks, Akshay. Hi all, a very good morning and welcome all to the Rushil Decor 2Q FY2024 earnings conference call hosted by Asian Markets Securities. From the management side, we have Mr. Rushil Decor, Executive Director, K.R. Gajjar, CEO, and Hiren Bhai, CFO. I now hand over the call to Rushil Bhai for his opening comments. Over to you. Thank you.
Thank you, Karan Bhai. Good morning, ladies and gentlemen, and welcome to Rushil Decor Limited earnings conference call for the second quarter and half year ended on 30th September 2023. I would like to thank Asian Markets Securities for arranging this call and all participants for taking the time to join this call. Today I am joined by Mr. K.R. Gajjar, Chief Executive Officer, and Mr. Hiren Bhai, Chief Financial Officer. We shared and uploaded the investor presentation on the exchanges and hope you have gone through the same. Firstly, allow me to provide an overview of some of the recent developments that have taken place at Rushil Decor. Company initiated a preferential allotment of rupees 124.74 crores for fueling expansion and working capital needs. The company entitled of a 3-star export recognition is a significant milestone, confirming our preparedness to leverage its strength and cater to the global export market. We anticipate that exports will play a key role, contributing an estimated rupees 250 crores to our revenue by financial year 24. Rushil Decor receives Indian Green Building certification for its MDF plant at Visakhapatnam. When we look at the quarter, there has been a marginal growth in the top line, which has been seen in terms of the market dynamics and subdued demand. July was notably impacted by the monsoon and witnessed the slower pace. We noticed a positive uptick in the August. By September, we experienced a significant recovery and a positive trajectory for the future. Even the raw material prices, which has shown a market increase during this quarter and has shown a respite and have stable since October. In spite of all the challenges hovering during this quarter, we exhibited a satisfactory growth in MDF and laminate segment. The current festive season have witnessed a surge in domestic demand, with consumers increasingly allocating resources to home renovation projects. This change in consumer preference reflects evolving lifestyle trends and growing emphasis on a modern, functional and elegant living space. In response to surging demand, our manufacturing facilities ensure efficient and scalable production while maintaining a strong focus on sustainability. The emphasis on sustainable product align with the growing global trend towards eco-consciousness and responsible sourcing. Our farm to furniture ideology is a commendable step in this direction, ensuring both quality and environmental responsibility. By financial year 24, we aim to plant 8 million saplings, ensuring sustainable supply of our raw material. We have established ourselves as a prominent player in MDF segment, significantly bolstering our market presence. Our strategic emphasis is of expanding our value-added product portfolio within the MDF segment has been resounding success. This is evident in the fact that value-added products now constitute a significant 50% of the total revenue generated from our MDF offerings. On the laminate front, the global market for the decorative laminate has witnessed substantial export volume growth driven by stabilization of the freight rates and raw material prices. Key destinations such as Saudi, UAE and Thailand have contributed to its positive trend. Capitalizing on this favorable market sentiment, our company has made the strategic decision to augment the greenfield capex of our laminate plant to rupees 90 crores from rupees 60 crores. We anticipate project revenue of rupees 160 crores to 180 crores by financial year 26, with a healthy EBITDA margin ranging between 12 to 15%. The new decorative laminate production facility, which will cater the premium export markets like Europe, USA, Australia, New Zealand, etc., intent of one line, we have decided to set up a second line preliminary driven by escalating demand for the jumbo boards of laminate. Moreover, the company places a strong emphasis on organizing carpenters and dealer meeting as a part of our strategy to boost product awareness and expanding our market presence. This meeting serves as valuable platforms for sharing insights, product knowledge and industry trends, ultimately fostering a better understanding of our product among the carpenters and dealers. This in turn enhance our brand recognition and product penetration in the market. As we look ahead to financial year 24, our objective is to take substantial stride in growing and fortifying our dealer and distributor network. This growth initiative aligns with our overachieving strategy to increase market coverage, improve accessibility to our products and deepen our relations with the value partner, fostering mutual success and growth for all stakeholders. This is all from my side. I would like to hand over call to our CFO, Hiren Padhya, who shall take you through the financial highlights. Thank you very much.
Good morning, everybody. Thank you, Mr. Rushil. I am pleased to provide you with an overview of our performance during the last quarter, that is Q2 FY24. At the outset, I would like to inform that company has initiated a preferential allotment of rupees 124.74 crore and the proceeds would be utilized mainly for first greenfield project for laminates and its working capital margin, that is 100 crore rupees. Second, MDF operational capex for 10 crore. Third, balance 14.74 crore for general corporate purpose. Our foremost strategy is to maintain operational stability while simultaneously driving growth in both MDF and laminate segments. To achieve this, we persistently fine-tune our operations to enhance efficiency. Furthermore, we have initiated phase 2 of our SAP implementation, a pivotal step towards operational excellence. Coming to quarterly performance, during this quarter, our company recorded operating revenue of rupees 204.6 crore, while MDF business contributed 150 crore, whereas laminate segment contributed 49 crores. Similarly, EBITDA for Q2 FY24 stood at 29 crores as against 47 crore in Q2 FY23. The volumes for MDF segment were at 60,413, which is up by 11.2% year over year. EBITDA margin for MDF segment stood at 17%. Our net profit for Q2 FY24 was reported at 11 crore, which is marginally lower than Q1 FY24. Coming to half-yearly performance, for the half-year ended September 30th, 2023, the net revenue from operations stood at 397 crores year-on-year basis, degrowth of around 4%. MDF segment contributed 296 crore and laminate similarly contributed 91 crore to total revenue in H1 FY24, compared to 310 10 crore and 100 crore in laminate for H1 FY23. EBITDA for the first half financial year stood at 58 crore as against 95 crore in previous year. The net profit was at 23 crore in H1 FY24 with a margin of 5.68%. We expect to see significant improvement in the second quarter of the year. We prioritize prudent debt management and currently maintain a conservative debt to equity ratio of 0.61. This approach ensures a healthy balance between leveraging opportunities and financial stability. Now we can open the floor for questions and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for the moment while the question queue assembles. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Keshav Lahoti from SDFC Securities. Please go ahead.
Hi. Thank you for the opportunity.
Keshav sir, lots of background noise is coming.
Hello. Is it better?
Yes sir, please go ahead.
Hi. Thank you for the opportunity. So, congrats on great set of number in muted demand environment. I just want to get a sense in PPT you have spoken about BIS. So, how will the BIS impact import? What is your initial take? How can the industry dynamic change?
Hi, good morning. I think we feel that any imports that will take place, they have to get ISI certifications. And they have set up certain criteria for various industry to obtain this ISI mark. So for domestic industry as well as for imports, they have to achieve ISI criteria. And when you try to get this criteria, when you try to fulfill those criteria, obviously your cost of raw materials and other expenses will increase. So we feel actually as on date, organized player offer only ISI product, BIS product.
Okay.
So we see there is a significant improvement in coming days. And from 1st March, for all import coming to India, they will have to get ISI.
Understood. So, is it getting ISI very expensive? Because my understanding was it's not very costly. Possibly the import can get it and they can import might continue its
expenses. For example, as on date, import board, their density is around 650, 670 only. Whereas those organized player in industry, they are offering their density around 710. Okay. In order to achieve performance criteria for a board, as per ISI standards, they have to increase their density, they have to increase the good, they have to give a good quality board. And when you try to do this, your cost of production will increase.
Understood. Whether is it possible to give you, for you to give us any sense, like how much import would be BIS compliant? Because we understand, there are majority of the imports coming that is not compliant, but what would that be like, number would look like?
See, most of the imports are industrial grades and their density ranging from 650, 670, 680. And then, from day one, they will not get the ISI credit. So they have to apply and lot of things. So it's not that immediately import will also start from 1st March with ISI grade. Probably it may, I'm not sure, but probably it may take some time for them to get ISI.
Okay.
And obviously, when you want to produce a good quality boards, as on date, all imports are more or less, I would say 95% probably, is industrial grades. And they are low density boards and.
And I would like to add here something that if we see that if we want any kind of CARB certification or maybe some kind of a EN certification, then there are the visits which has to be done on the industry side. The same process is for the ISI also. So they need to make their plants equipped for the ISI standards of the testings and everything. So for arranging those things for a manufacturer is also will be a time-taking process.
Okay, got it. Understood. So what we see, you are talking about 250 crore export in this year also. So possibly you are talking your MDF export will continue. But while other peers are talking about export is just like a 2 to 3% margin business, they are sort of least interested. So where you have a edge over others, how is your raw material costing? What was your timber cost per kg in quarter 2?
So first of all, I will like to answer the question that export we have an export obligation that has to be catered. So our target is first to fulfill that. Secondly, talking about the exports, we have got a good margin than maybe our competitors because of the presence in the different markets as well, such as Portugal, Spain. So this has give us an upper edge. And another point is the port availability is hardly around 40 kilometers from our plant. So the cost benefit over other documentation charges and other charges makes us more compatible for exports than our peer competitors.
Understood.
And we have a fixed target for export that every month we'll be doing 5,000 cubic meters of export to make sure that our production is evenly distributed through other things as well. And talking about the raw material pricing, our prices in wood have increased by 6 to 8%. And at the same point of time, the prices in resin has gone down by 7 to 8%.
Got it. So you have the number of timber cost per kg handy with you for Q2?
We can let you know.
Okay. One last follow-up question from my side. So what is your export obligation for each year and till when it will continue?
The overall export obligation was 187-88 crores, out of which the first tranche of 50% the time has completed, and as of now we have got time up to October 2024, and the balance is as of now 48 crore only. So it is very easily achievable, but as I think said by Rushil, again we are just having a strategy of 5,000 CBM per day per month export planning, but this is one of the criteria for export.
Got it. Understood. Thank you. That's it from my side.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Bhavin Rupani from Investec. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So you mentioned that you have better margins as compared to your competitors in case of exports of MDF. Is it possible for you to quantify it?
Sorry, can you repeat the question?
So you just mentioned that your export margins are better as compared to your competitors in case of MDF exports. So can you quantify it? What are the margins?
Just a moment.
See, the export realization during last couple of quarters, I think it was in the range of 18,000 to 19,000 per CBM. This quarter, I think it has improved marginally. And again, see, it depends upon the terms and the product mix which we are exporting as of now. So if there is a component of value-added product is higher, then the realization would definitely increase. Why we are saying better? Because see, we are in the process of improving our value-added products in both the plants. See, in case of the older plant, Chikmagalur, where the value-added proportion is more than 65%, but the export is minimal. In case of Visakhapatnam, the value-added proportion is increasing over, I think, last couple of quarters, at least 5% every quarter. So when it is increasing in terms of value-added products, the realization will definitely improve. So I think the reference context was from this.
If we talk about, I just want to add, last quarter we export 26% value added out of 100%. So if we talk about 1,600 CBM, we have exported 3,700 value added. And you know, value added is always a bit more interesting than the industrial grade.
Okay, sir. Just if you want to bifurcate between the margins of value-added product and the industrial product, what would be our margins for exports in case of industrial product?
See, I think we won't be able to exactly quantify. As I said earlier, it depends upon product mix, but then the realization part, I think you'll be able to know. The normal realization in terms of industrial product is in the range of 24,000-25,000. As against that, the value-added realization is in the range of 30,000-31,000 also. So there's a direct correlation between value-added product and the realization.
Okay. My next question is related to your export obligations. You mentioned that you have export obligation till October 24. Do we intend to continue exporting after completion of our obligation period?
Yes. So we'll be recovering the obligation faster than what the target was. For us, if we see the 48 crores, hardly maybe 2 quarters, not more than that.
So just to clarify, you are saying that you will be exporting after completion of the obligation period?
Yes, we will. See, it's our strategy that we have a advantage of being near to the port. Then we should rather maintain the margins in domestic by making the supply very stable and doing an excess capacity of exports. So it's not that we'll be just doing 5,000 cubic meters every month. Our ratios may change after the obligation is over. After seeing the forecasting of the markets, how we see it in the global demand and the domestic demand.
And also, we are trying to set up good business relations in certain developing countries where our margins will be comparatively higher for long-term supply. Like we are in process of exporting our value-added products to North America, European continents too. So this will be added advantage.
Okay, sir. And sir, any sense on incremental domestic capacities that are coming up? What is the capacity right now, and what is the incremental capacity that is coming in 1 or 2 years?
Right now, if I'm not mistaken, plus or minus 5-7%, it's around 2.8 million CBM.
And what is the incremental capacity that is coming up?
I think in next 2 years, we anticipate around 1.3 million.
Any idea on who are the players who are installing the capacities?
So far, for our side, we have not, decided anything.
For peers, we don't right now would like to comment as well.
Okay. Sir, my next question is related to laminates. If you see your domestic and export realizations have dropped significantly in the current quarter as compared to last year, September. So have you taken any price cuts over here, or is there any change in the product mix?
Very honestly, in last quarter, as such, price cut, it's like a case-to-case basis. And it's not only with Rushil Decor, but it's now with all the companies. In order to maintain the market share, you can either introduce new grade or, you can give some special discounts for bulk buyer. So this kind of process is ongoing now. But if you check our realization compared to Q1 last quarter, it's more or less consistent.
So that has also dropped by 7 odd %.
I would say from AP, our last quarter overall realization for domestic was 25,856. In this quarter, it is 26,815. Are we talking about laminates or MDF?
Sir, I'm talking about laminates, sir.
I mistake. I'm sorry.
Yeah.
Yes, because that's only because of the product mix that has changed. If you see our volume, it's now more than 300,000 plus. And we, cater some of the low-cost products also in order to utilization of our capacity. Otherwise, I don't see any price cuts in our exports or domestic region. It's the same as before.
Okay, sir. And sir, our domestic laminates volumes, they have increased merely by 2%. Can you tell us some of the steps that we are taking over here to increase our domestic market share and volumes over here?
That's our ongoing consistent efforts in order to increase our market share. And yes, in certain segments, we did extremely well than the last quarter.
So we take then additional efforts like, as I told during my opening speech about our dealer meets, distributor meets, carpenter meets, in order to make our presence in the market more efficient.
Okay, and sir, my last question is related to your greenfield capex for laminates. What is the total capex over here, and how should one understand the asset turnovers and margins for the jumbo laminates?
So the initial investment was thought of around 60 odd crores, and later we saw increasing demand in the market, so we took a decision of adding one more press of different size in order to make sure we cater to all sizes available in the market. And the capex plan was raised to around 90 crores. And I'm talking about the turnover. Our turnover last year was estimated around 50 crores from the exports, which has now increased to 75 crores. And I think asset turnover ratio, we need to take it out and we'll let you know.
Sir, how should one look at the margins of this jumbo laminates? Is it better as compared to
jumbo laminates is altogether a different market, and it's into a very niche market where the consumer understands what the quality product is. And we estimate our EBITDA margins to be around 12 to 15%.
That is helpful, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Rajesh Ravi from SDFC Securities. Please go ahead.
Yeah, hi sir. Good afternoon. My first question pertains to could you share what is your MDF regional sales mix on total basis?
So as I said last year also, like we are almost maintaining 25-75% ratio. 15,000, around 14,000 surplus CBM exports and balance domestics. And
in domestic market, region-wise?
AP plant.
No, on total basis. On total basis at company level, what is your regional sales mix?
It is around 45,921 from both the plant domestic and 14,492 exports.
Sir, in domestic market, what is your regional sales, sir?
Sorry?
In domestic market in India, region-wise, what is the volume sales breakup?
I would say we are around 40 to 45% in southern market and 25% and 25%, 15% in north, 10% in east and balance in west.
15 north, 10% east, you said, right?
Yes, 15 north, 10% east, balance I would say from west, Gujarat, Maharashtra and Madhya Pradesh.
So that is around 30%?
Yeah, you will say that.
Okay.
30 to 35%.
30 to 35% in the west. MP you including in this west, right?
Yeah. MP, Gujarat, Maharashtra.
MP, Gujarat and Maharashtra, okay. And sir,
for our market share in Gujarat market for last 2 quarters.
Okay, great. Sir, in the for the FY24, your first half domestic volume is slightly down. What is the outlook for the full year MDF?
I think now this quarter it's now again festive season, so coming quarters we see volume growth. If you compare our last quarter to quarter 1 to quarter 2, there is a growth of 3% in terms of volume. So we are looking forward to having same growth in coming quarters.
And talking about the next growth, so from this 1st of March, we have an additional benefit of BIS standard, so that will increase our volume for next year as well.
Okay, you were talking about this BIS standard helping. Does it imply that good amount of MDF imports are non-compliant and hence they will suffer? And since when it is applicable, sir, this BIS norms?
So from 1st of March, the BIS norms will be applicable. So if we see the current quarter, the import was around 48,000 CBM, just the industrial grade. Now, if the demand is such high at this level and after BIS comes, we will have this 48,000 CBM raw gap between us and the other international manufacturers which we have to search for. So we see a great demand for next year as well.
Okay, so next year saying this 48,000 CBM quarterly which is coming through, that will shrink significantly and that opportunity will go to BIS compliant players.
Yes.
So we can see this opportunity in 2 ways. One is there may be company who they are selling it to India for just marginal cost purpose. They might change it to UAE or other part, number one.
Okay.
They are serious enough to maintain their market share in Indian market, then probably they have to upgrade their products quality.
Okay.
And in turn it will, increase their
cost. Right. Okay.
So in both the situations we see advantages.
So would you have any estimate that out of this 48,000 odd, how much is non-BIS, non-compliant and hence that is an opportunity?
90-95% is industrial grade. And the density of this product is ranging around 650 to 670 kg per meter, centimeter cube. So I don't see, I mean, they have to, bring these standards to local players, organized players. And
Okay.
even for
So
domestic players also, they have to upgrade their quality.
okay. So it's more for density under BIS, which matters a lot, or like industrial grade is by design it is a non-compliant one?
No, it's indirectly because for BIS, there are a lot of standards like, MOE and IB, internal bonding. To achieve these standards, you have to, increase your density.
Okay. Okay, understood. So that is where an opportunity for next year, which may accrue to the Indian producers,
Exactly.
branded ones. Sir, exports, can you, so you mentioned you have around 48 crore of export obligations, which would be across both laminates as well as MDF, right?
No. This is purely for the MDF from Andhra Pradesh plant.
Acha, from the Andhra Pradesh plant. Because for full first half, if I see, you have already done 50 crore exports in MDF.
Yeah.
So, this 48 crore would be, how much time would it take for you to meet this obligation?
Only 2 quarters.
2 quarters. And this exports margin for you also a sub 5%? Is that understanding correct?
See, this is all about the product mix and the market you are serving to.
Mm-hmm.
We just don't serve to the UAE market, which is where the peers are located. We also go to the other countries, developed countries like Poland, Spain, Canada. So we have another value-added demand which is coming up in a higher volume from these countries.
Okay.
And we have an advantage of being nearer to the port, just 40 kilometers away. So other charges which our peers have to pay more, which are less on our side. So that is an advantage for us.
Okay. Understood. So does this imply that your export margins are much better than, or it is closer to a 10% or even north of 10%?
It depends on the value-added mix which we do. It will range between 8 to 12%.
Okay. So for the first half, if I have to look at, it would be in that range, exports margins.
Yeah.
Okay, great. And sir, coming to the laminate side, if I look at while your margins have improved superbly and even other players have reported, why is the realizations down year on year? Is it because of the sea freight?
So there are 2-3 reasons. One for domestic, because you can see there is a significant increase in our quantity, and we have added some new product mix. That's one of the reasons. And second is, here you can see, almost huge reduction in freight cost. Now it's almost pre-COVID level. So if we compare with last year Q2, then yes, that's one of the reasons.
Okay, no, I'm looking at exports volume for you is around 8 lakhs in first half. Realization has come down by 13%. So what would explain the major fall in the export realizations? Do you also...
2 reasons, like, freight component, number 1, and number 2, reduction in cost of raw material. So several places, we have different product mix. For Gulf, we have a different product mix. For Far East, we have a different product mix. So that's one of the reasons why this realization is lower compared to last year.
But just from my understanding, even when you ship from India, do you build the sea freight in top line and in cost? Or this is your building, most of the billing in exports happen at, FOR basis?
No. We have a CIF basis also. Okay.
Yeah, but partly would be CIF or almost all your export shipment would be in CIF?
I would say 95%, 98%. Because, in laminates, normally the price list is always on CIF basis.
Okay. And that as a percentage of top line would be how much of your export revenues, please?
It depends country to country. Probably for me it's very difficult to tell now, but yeah, it depends on the country to country.
Okay. Okay. Great, sir. Thank you. I'll come back in queue.
Thank you.
Thank you. The next question is from the line of Karan Batilia. Please go ahead.
Hi, sir. Am I audible?
Yes, sir. Please go ahead.
Sir, just wanted to understand the raw material cost inflation over a 1-year period, and how do you see that shaping in the current year?
Hi, Karan. So first of all, the wood runs with a cycle, and the periodic cycle is roughly from 3 to 5 years.
Right.
And depending on that, every 3 to 5 years, the price, there may be hike and there may be the surge in the price. It depends on the situation. The current situation is about the price going upwards. So in this quarter also, we ranged around, I think 6 to 8% price hike in the wood. So which we may see as after 1.5 year, or maybe after 1 year, it may go down. Then by the time, right, in the current quarter, what we are observing is really stable. So it is really difficult for us to forecast the wood market and see what will be the prices in the future as well.
Right. But sir, if I have to compare on a YOY basis, what was the average timber cost per kg or per CBM in the second quarter compared to the last year second quarter?
We can get back to you with this question because
Right.
the figures are not with me really handy right now.
Right. Cool, no issues. And sir, now that we are already very near to a 75% capacity utilization for MDF, in total. So, any plans for capex, because we believe it will take 1.5 years for any big capex to come through. So, any initial thoughts on the same?
We are internally reviewing our capex plan for the other segment as well. So if we come to a good decision, we'll let you know.
Right.
And as of now, we have got that the capacity to make sure that if we implement also one more capacity, then we have that capacity to drive the market by the time we implement it.
Correct. And sir, any commentary on the debt payment or on the working capital side, more from a 1 year, 2 year perspective?
See, I get your question. Working capital side? Sorry? What was your question exactly?
Any concrete plans on debt repayment and how sustainable is the working capital days for you in next 1 or 2 years?
See, so far as overall debt is concerned, I think compared to last financial year, March 2023, it was total was 406, which has reduced to 317 in June, and as of now, in September, it is 308. Out of which, more than 200 crore, 230 plus is the long-term debt. And the working capital is concerned, the approved facilities in the range of 85 crore, against which I think we have utilized little lower as of now. It is in the range of 68 to 70 crore as of now. Now, coming to the overall planning, see, we have whatever date we have as of now, we are making repayment on a yearly basis, which will be in the range of 55 to 60 crore every year. So last quarter again we had repaid almost 14-15 crore. So this will continue on one side. Secondly, as per the management strategy, there are two things which is very clear. One is like we don't want to dilute, and secondly, even if we have down the line 1 or 2 years, whatever new projects we are planning in terms of expansion in laminates or maybe in any other product, our strategy is very clear that our debt equity ratio should not be more than 1. If you see as of now, it is in the range of 0.64. So even if we plan for something, whatever project we have planned for laminate and any other project, so we will maintain that thing that it should not exceed 1.
Great. I think that was helpful. We may proceed with the queue. Thank you.
Okay.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. On this expansion project which you're looking at, Mansa, the project cost earlier, is it that you have revised the project size? Because earlier you were planning, 60 crore capex. Now you have mentioned 90 crore. And also, can you throw some light on the timeline? Because you are mentioning up to 2 years. Earlier you were planning this to be operational by Q1 FY25.
See, as informed earlier in the call by Rushil, that the earlier whatever we planned was 60 crore, and at that time the capacity we were planning was around 1.2 million. Now looking to the market of developed countries, what we see that demand is very good, and the margins are very good in terms of export in the developed countries. So we had revised our plan and we added one more line in terms of capacity. So from 60 to 90 is mainly because of this on one side. Now secondly, what you are talking about is 2 years. It is, as a part of that process of fundraising, we have got that maximum time available. So 2 years is the time which is available maximum. That doesn't mean that we'll wait for 2 years. It depends. So as per the requirement, we will utilize that fund as early as possible, because our original plan was like June 2024 was the plan to start this project. Now considering this additional part, I think we will be planning to start the commercial production in the second quarter of the next financial year. I think I have answered your question.
Rajesh, are you there?
Hello, sorry. Hello. From 1.2 million sheets, this will increase to how much?
The total fund which we are going to infuse is like 124.74 crore, out of which 90 plus 10 crore for working capital margin. So 100 crore is for this particular project. So where we have given timeline of 2 years, which is the maximum timeline.
Understood, sir. I'm saying the capacity which you are taking up, earlier 1.2 million sheets, will now be how much? You said that you will be taking an extra line.
What will be 1.2 million. Now considering the additional part, it would be in the range of 2.5 to 3 million.
Oh, it will be almost doubling your current capacity.
Yes.
Okay, great. And this is a greenfield one?
Yes.
Okay, sir. Last question on the laminate. Could you throw some understanding on the laminate raw materials, all the decor and chemicals and all? Are they all abundantly available, competitively available in domestic market, or you have to also rely for resins and all from import markets?
Yes, Rajesh, it's very easily available. It's not a problem like phenol, methanol, formaldehyde, even resin manufacturers are there. And there are, plenty of supply. So that's not a big problem. Even in India also we have a phenol manufacturer. So that's not a problem. We see a lot of supply. And for base paper and design paper, we have options of buying it from Europe, Japan, China, India. So we don't see any problem in making laminates, and raw material is always easy to get it.
Okay, so you have domestic supply sufficient enough, and even imports are abundantly available without any pricing hiccups.
Yeah, it's not a problem.
Okay, yeah. Great, sir. That's all from my end. Thank you.
Thank you. The next question is from the line of Bhavin Rupani from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity again. Sir, I have just one question. At our existing MDF and laminates plant, do we have any space to expand our capacities?
So actually in MDF, the technology what we are using is designed for more than 110% utilization. And talking about the laminates, in the current the current facilities, yes, we have got the space of around 8% to 10% where we can produce. So yes, we don't see any, the supply point of view, we don't see any hustle to make the extra production if needed.
Got it, sir. In case of MDF, once we reach the optimum utilization, do we have capacity? Do we have any place to increase the capacity after that? A brownfield expansion at the existing location?
We don't see any brownfield expansions. We always like to see ourselves growing into the pace what the company has achieved in the history. If you see our history, we are almost doubling the company every 4 years, and that is what our target is.
Okay, sir. Thank you.
And that cannot be achieved from a brownfield project. So we'll be always looking for a greenfield project.
Got it, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Karan Bhatelia for closing comments.
Hi, sir. Thank you for the opportunity. And sir, any closing remarks you want to make?
Yeah, thank you everyone for giving us an opportunity to speak to you. Thank you very much. Looking forward to get back to you for the next earnings call.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.